FY27 earnings conference call of ST Finserve, hosted by Equirus Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risk and uncertainties that are difficult to predict. I now hand the conference over to Mr. Shripal Doshi from Equirus Securities. Thank you, and over to you, Mr. Shripal.
Thank you, Swapnali. Good evening, everyone. We welcome you to the earnings conference call of ST Finserve to discuss the Q1 FY27 performance of the company. Today, we have the management of the company represented by Mr. Vinay Gupta, CEO, and Mr. Anubhav Gupta, Group Chief Strategy Officer, along with other senior management team. I would now like to hand over the call to the management for their opening remarks, post which we can open the forum for question and answer. Over to you, sir.
Thank you, Shripal. Jai Hind, everyone. My name is Vinay Gupta, CEO of your NBFC SG Finserve Limited. With me, I have my senior colleagues Anubhav, Group Chief Strategy Officer, Abhishek Mahajan as CRO, Lalit, CVO, and Sanjay, CFO of the company. Thank you all for your continued interest in SG Finserve, and thanks to the Equirus team for hosting us today. We are pleased to share that we have delivered an excellent performance during Q1. We have achieved our highest ever quarterly PBT of 72 crore, representing 27% quarter-on-quarter growth. Our loan book also has reached a record 4,552 crore, growing 16% quarter-on-quarter and 82% year-on-year basis. Our net worth stands strong at 1,539 crore, supported by a moderate leverage of 2.2x and capital adequacy ratio of strong 32%. This giving us an ample headroom for future growth. Our annualized return on assets has been 5.1% and annualized return on equity has been 14%. We continue to maintain best-in-class asset quality with nil NPAs. Our lean team structure and strong digital capabilities have helped us achieve a per employee profitability of more than 2 crore rupees per annum. Today, we are among approximately 1% of financial institutions in the country who are offering factoring and trade solutions, which we have commercialized during the month of March and April. We continue to follow our deepening and widening strategy to grow our business by acquiring new customers and increasing our business with existing customers. We continue to launch new products and new structures to augment the growth. We have clear visibility to achieve a PBT of around 300 crore given the current run rate which we are operating at. The 300 crore PBT during the financial year FY27, which we have the visibility to, would entail around 75% year-on-year growth. With that, I would like to hand over the call back to our host, Equirus team. Thank you.
So, shall we open the floor for questions?
Yes, we can.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants, you are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to all the participants, you may press star and 1 to ask a question. We have the first question from the line of Abhi Jain from AJ Capital. Please go ahead.
Hi, good evening. Hope I'm audible.
Yes,
Abhi, you are.
Hi, Mr. Gupta. First of all, congratulations. And you have delivered a staggering result. And you are continuing with your promise of nil NPA, which is unheard of. So there is a magic wand that you have. Only you know of how you're doing it. But incredible results. So congratulations to you and your team. So just taking the fact forward of your guidance of 300 crores of PBT this year, I'm just doing a back calculation, and it seems like that, the year-ending book will be close to about 6,000 crores, the loan book, roughly taking into account the, ROA stays at around 5.2%. With regards to that, I just want to understand your plan, or if you can just give me a walkthrough of how do you see the end equity position at the end of the year? Because because we already have a very strong, CRAR, and the debt to equity is quite strong. So do you plan to continue that debt to equity ratio, which we, roughly we are looking at year-end net worth of close to 2,500 odd crores, which means an equity ratio of about 600-700 odd crores this financial year? Can you give some guidance, or can you give some idea around how are you looking at equity raise this year?
Yeah, thanks a lot, Abhi, for your well wishes. We don't have any magic wand. The magic wand is the business, the way we are operating. We are a supply chain focused NBFC, and supply chain inherently have lower credit cost. But nevertheless, coming to your question, we had 1.9x leverage on 31st March. Currently, we stand at 2.2. So to expand, we're maintaining return on asset at around 5%, which has been stabilized now more or less. Now, with return on asset being stabilizing at 5%, our endeavor is to transit ourselves from a 2 to 3x kind of a leverage, so that our return on equity expands. Now, 1,460 crore was the equity base on March. 20 crore we raised as a warrant conversion in April with accumulated profit. I think we should exit the financial year around 1,700 crore kind of equity. With 1,700 crore kind of equity, so 6,000 crore number may be a little aspirational. 5,500 crore is something which we have a visibility to today.
So this 1,700 crores excludes the PAT for this year, right?
No, it includes, because 300 crore PBT translates to around 225 crore kind of PAT. So it roughly reaches around 1,700 crore kind of equity base.
So you are basically saying that you are not planning to raise any equity during this financial year, because I think with this quarter result, you're already at about 1,510 odd crores of book value, if I'm not wrong.
4,500 crore is the book when we exited the June.
No, sorry. I mean, the net worth is already around 1,510 odd crores, right?
1,539 crore already on 30th June.
Okay.
We don't plan to raise any equity because we don't need to raise any equity.
I know. I mean, with the capital adequacy and everything, you don't need to. The only thing for investing perspective, and it's a very technical thing, is that the phenomenal growth will not be captured in the book value. Obviously, you don't need equity. The only point is that, the book value growth will be much slower than the financial growth. But that's okay. I mean, for long-term investors, it doesn't matter. But I was just trying to understand that. So, that's okay, sir. It's okay. I mean, yeah.
So our focus is, maintain return on asset at 5%. Over a period of 2 years, transit from a 2x leverage to 3x leverage, which will translate our return on equity, which is around 14% today. It will naturally transit towards 16% kind of a return on equity. And that has been the guidance we have been constantly giving.
Yeah, I think you will land up at a higher ROE, I think. But yeah. Great, sir. I mean, I don't know what to say. It's a fortress balance sheet the way you're going at that kind of debt to equity, that kind of leverage, the kind of result that you're getting. It's fabulous. So just some, there is still a lot of tension about this geopolitical tension. It is hitting the MSME sector, the SME sector. Any red flags, any early warning signs that you're seeing, any sort of disturbance that you see might, weaken the businesses in your supply chain network, or do you think that, that's fairly robust even after the so long war?
So geopolitical uncertainty is the reality. It's not a myth. And thankfully, we are not seeing that as a challenge to our credit cost. But certainly, it has a challenge to our business. It's a business risk, in a way, because the kind of enhancements or the working capital incremental requirements that traders and the end user needed in the past, that has come down. Now, with that has come down, of course, then we are resorting back to acquiring new customer, expanding ourselves with a new product, new geographies. So that is the kind of pressure we have on the business, but that is not translating into credit as of now.
Right. Right. No, I think your slide number 13 is an interesting addition in the deck, which talks about, where you are and where you aim to be at. Can you just provide to all the investors a little update going forward also around, what is your target area? This amber, red, green is a beautiful slide that you have laid out in, say, in terms of what your future plan is. But can you just give some details around what your thoughts are around the areas that you are not targeting yet, and when do you plan to go after those areas, and what do you see on the surface? So that would also help, because it's a very good vision statement, the slide number 13.
Yeah, thank you, Abhi. The area of our interest continues to be supply chain, but there are areas which are in and around supply chain, may not be directly supply chain, because we are a MSME focused NBFC, we are a digital first NBFC. Now, with the combination of MSME and the digital stack which we have, it creates an opportunity to naturally expand ourselves to maybe a digital lending business. Then we have the team size spread across 30 locations. Then it gives an opportunity for us to do cross-sell in terms of doing a lab business. So there are two products which is clearly in my mind that we will enter sooner. While we continue to remain focused on the distribution ecosystem, we started with tier 1, we slowly, gradually started capturing tier 2. With the factoring, we have started capturing B2B business. So we remain on the sales side of the corporate. So we try and cover the entire sales ecosystem.
Yeah. Great, sir. Congratulations again on a great set of numbers. As I said, that you have some magic wand. These numbers are unheard of in the industry, at least in India. So yeah, all the best to you, and hope you have your eyes on this, and hope you keep delivering. Thank you.
Thank you so much, Abhi.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and 1 to ask questions. We have the next question from the line of Daksh Jain from Sagun Capital. Please go ahead.
Yes, sir. Congrats on a good set of numbers. I just have a few questions on your lending side. So the cost to income has been low at this quarter at 7% against our guidance of 14% for the year. So going forward, do we expect any significant increase in the expenses to justify this? And if so, where do these expenses will be, going into?
So that's, 1% from our, if you look at our return on asset tree, 1% is the OPEX cost which we envisage and we will be maintaining. In Q4 also we had around 1%, Q1 also around 1%. So as the business is growing, our cost to income may look lower, but the right way to look at would be, look at the absolute, 1% is the cost of the book, average book. So that is something which we plan to maintain going forward also. As I said in my previous answer also, we are a lean structure from the operating leverage perspective. We leverage more of our digital capability. So we don't expect ourselves to grow in terms of a large team sizes. We would like to leverage the digital capability, and we continue to remain lean in terms of operating leverage.
Okay, but the 14% number, how will it be, achieved then? Because the expenses have to rise eventually compared to your revenue.
No, so we don't plan to achieve 15% cost to income. Our guidance is that okay, we will maintain our cost to income below 15%.
Okay, got it. Okay, and sir, can you give a breakup of your loan book in terms of SCF versus retail or MSME versus MSME versus SCF?
So, Daksh, we are not doing any retail financing, any consumer financing. So that limit ourselves to only doing business financing. Now, within the business financing, around 2/3 of our business is, hover around working capital solutions, supply chain solutions, factoring solution, which is a bouquet of working capital solutions across MSMEs and corporates. And around 1/3 would be maybe beyond supply chain and working capital. That may be, in terms of cross-sell, we may be doing here and there, maybe in terms of LAP or some transaction which is more opportunistic in nature.
Okay, and how much percentage of our SCF AUM is coming from Apollo Linked Group? Apollo linked entity?
Around one third of our AUM, it is lower in June quarter, but historically and going forward, we see that one third of our overall AUM should be coming from APL Apollo ecosystem. So two-third will remain supply chain and working capital. Of that, 50% will be APL Apollo. So one-third. One-third APL Apollo supply chain, one-third non-APL Apollo supply chain working capital, and the remaining one-third is beyond supply chain.
Okay, got it. And if you can also share, earlier you used to share the MOU numbers, the memorandum of understanding, the number you had with the anchor clients. So if you can also share going forward.
So that's last quarter earning call also we said that is more of a dummy limit. It does not give any visibility of the book. Unfortunately, it only raises the expectation high, because today, if I were to tell you, we have 52 anchors, we have signed up MOU worth 7,700 crores, but that number does not give any visibility of with the book, because that may not translate into the actual book or AUM.
Okay.
But since as I'm telling you, there are 52 anchor mandates with 7,700 crore worth MOU signed.
Okay, thank you.
Thank you.
Thank you. We will take the next question from the line of Kushal Jajodia from Kushal Jajodia and Associates. Please go ahead.
Hi, Vinay. Good afternoon.
Yeah, good afternoon, Kushal.
Yeah, so I have two questions, Vinay, for you. So in the investor presentation, I could see in the corporate list, few hospitals are there. So wanted to understand what business do you do with the hospitals?
Factoring.
Factoring, can you elaborate?
I will not be able to divulge too much detail, but hospital has receivable and payable in their balance sheet, and at times they need B2B solutioning around their factoring of their receivables and payables. So that is the kind of a solution we have provided.
Okay. Now, second part, and what is the component of this? Because I could see like 2 to 3 hospitals there. So only factoring will be a very small amount, right? Of the total revenue, of the total AUM?
Around 5% of our total AUM is around factoring today.
Okay. Second part of the question is, wanted some elaboration about the ESOP policy. I could see like 55,000 options has been granted in this month, in this board meeting. So in the prior board resolution, I could see there was an intimation that you guys are basically giving 10 lakh employee options, right? So 55,000 might have been given at this board meeting. So what is the policy per se? Like, are you guys opening a trust in which the trust will purchase, or it's like that the direct allotment will come from the company?
So it's a direct allotment from the company, Kushal. So we have an ESOP pool of 20 lakh, which we have approved with shareholders. And the 50,000 new ESOPs has been given for the new joinees who have joined us.
Okay, so the earlier 20 lakh have those been already given, or it's pending?
So 20 lakh is total pool. Out of which 10 lakh 32,000 we given month of April, and around 50,000 we are given now.
Okay, so it's still left of approximately 9 lakhs and all.
Around, yes, you can say that.
So every time, just wanted to understand, Vinay, every time a new employee comes or a senior designation employee comes, so additional pool you guys will be creating for the new employees?
No. There's a total pool approved by the shareholder, 20 lakh. So
okay, so the maximum limit has been committed, right? It will not exceed 20 lakhs, right?
No, without your approval. If anything we need more, we need to create a new pool. We'll come to the shareholder, take approval. So anything which we are granting today, it is part of that same pool of 20 lakh only.
Okay, so the balance 9 lakh approximately, the employee pool option, what is the approximate time have you decided to give them?
No, Kushal, we have not decided yet.
Not decided yet.
Not decided.
Okay. Thank you so much.
Thank you, Kushal.
Thank you. We will take the next question from the line of Akash Srivastava, an individual investor. Please go ahead.
Hello. Good afternoon, sir. Congratulations for very good set of numbers. Sir, we are at nil NPA now. So whether we will be able to maintain such low NPA in future. And my second question is, what CAGR growth can we expect in our loan book in next 3 years? And if we will maintain 3:1 debt to equity ratio, when we will require to raise equity? And one last clarification, you have mentioned 300 crore PBT for FY27 and 225 crore of PAT. Whether have I heard right?
Yes, you heard right. So Akash, thank you so much for your wishes. Now I'll answer one by one. In terms of the 3-year trajectory, we are maintaining our same guidance. Over a period of 3 to 4 years, we plan to grow our AUM around 25 to 30% growth. However, profitability we are targeting to grow at 30 to 35% CAGR. But when the growth is happening currently, as I said in my previous answer also, we currently leverage at 2.2, and with the accumulation of profit will happen in tandem with the growth of the book. So up to 10,000 crore of AUM, we don't need any equity. With a 3x leverage, 10,000 crore book over a period of 3 to 4 years, with the 25 to 30% CAGR, we don't need any equity, and we'll be able to organically grow and achieve that number.
And what about NPA, sir? We are at NPA now. Whether we will be able to maintain such a tremendous number in future?
I'm not sure that, Akash. Although aspiration, target, efforts are towards maintaining nil NPA, and that has been a stated objective and the guidance from the management as part of the investor presentation also. But we do understand that we are into lending business, and in the lending business, the accident losses may occur in future. But by the time, I think we will be able to expand ourselves to a good level of net worth and good level of profitability to absorb any unsudden shock at all if happens. But that's not what we are targeting. Our target and aspiration is to maintain nil NPA.
Yeah. And one more question, sir. We are entering into factoring business. Can you explain that what is the TAM regarding this business, how big it is? And next and last question is, you are targeting for 10,000 crore AUM. Can we expect that AUM in next 2 to 3 years?
3 years, yes. No, 2 years, no. So 3 years, yes, 10,000 crore AUM is definitely what we are targeting also. Regarding the TAM, I will just say on the sales side, we did some numbers. It's approximate around top 1,000 corporates in the country. Their receivable on the balance sheet is around 25 lakh crore. So that is the target market for us. Because target market in our eyes is not what factoring has already been delivered or a channel financing which has already been delivered, which is sitting in the balance sheet of the banks and NBFC. For us, the target market is to hunt the new corporates, look at channel financing, look at factoring, because both complement each other. One is for the B2B solution, other is a B2D solution. And with the combination of two, our aspiration is to target that market which is remain unaddressed, untapped so far. So 25 lakh crore is the target market as per my guesstimate.
Yeah. Thank you, sir. Last clarification. 10,000 crore AUM for next 3 years in this calculation, FY26 is included or excluded?
Excluded. No, excluded. FY27 is included. So it's 27, 28, 29, 30. So FY30 is what we are targeting to achieve 10,000 crore.
Okay. Thank you, sir. Thank you very much.
Thank you, Akash.
Thank you. We will take the next question from the line of Yash from SS Tools. Please go ahead. Due to no response, we will take the next participant. We have the next question from Vipul Lamba from EVK. Mr. Vipul has left the queue. We will move on to the next participant. We have the next question from the line of Vaibhav Mehta from Axis Mutual Fund. Please go ahead.
Hi, sir. Congrats for the good set of numbers. Actually, I was looking to the company for the first time. So my question would be a bit qualitative. Can you help me understand the deepening and the widening strategy of the company in terms of acquiring corporates? As the growth in AUM is phenomenal, and also to understand on the modes of our business, as to how we differentiate from our competitors, as business is very attractive. So how do we differentiate? Yeah, that would be my question.
Thank you so much, Vaibhav. So, supply chain finance market is it's a very big market, but it still continues to remain a very niche market because there are only handful financial institutions who are catering to this. But as our strategy of deepening and widening, the deepening is purely across existing anchors. Idea is to grab more and more dealers under the existing programs we already tied up. So, for example, we today have 52 anchor mandates we are running with. So, idea is to get more leads and deepen that relationship with that anchor. Although the anchor level, the deepening is happening in the relationship, but at dealer level, we end up acquiring new dealers and that become a new customer for us. Number one. Number two, deepening also happening across existing dealer base by selling new products. And as well as across the anchors by selling, let's say for example, there are anchors, we used to do channel finance, we have started doing factoring also. So that also helps in deepening. So this is the deepening cohort for us. Then the widening is a little overlap between the deepening and widening, because widening is new products, new geographies, new anchors. We acquired new 5 mandates in the month of Q1. Idea is to acquire more mandates and then start engaging them for the new business, as well as widespread ourselves in terms of new dealers, new customers, new MSMEs, so that we can look at growing our business. We continue to innovate and launch new products. For example, in my previous question, I said the digital lending and loan against property as the 2 products which is there in our mind, and we are thinking about it to launch in the market. So this is how the entire strategy is. Now, our strategy from a business mode perspective, we don't compete. Generally we believe if there are large banks and NBFC who can deliver a particular solution at a particular competitive pricing, so it is only helpful from the anchor and dealer perspective. What we do, where we chip in, if there is a market which remain unaddressed, if a dealer need X amount and if they're able to garner only a fraction of that X amount, that amount which is left unaddressed by the existing banks and NBFC, that is the gap which we fill in.
Got it. So, what would be the reasons why this would not be fulfilled by normal channels of banks? You can if we understand, do we have a better underwriting in terms of getting these dealers? And what would be current TAM for this particular market that is unaddressed?
So I can only make guesses here, Vaibhav. I would not be able to comment why. But I have few examples to quote. If there's a dealer who needed 10 crore rupees of working capital to manage its trading business and procurement from a particular anchor, and the banks and NBFC with this dealer was banking, the banks and NBFC had an appetite to fulfill only 8 crore requirement. Now that 8 crore requirement is fulfilled, but it does not mean the dealer reduces its requirement. Dealer reduces his business, or anchor will allow the dealer to reduce the business. So the 2 crore gap, somebody has to fill in. So it's not only SG Finserve is doing. There are many companies who are operating in our supply chain space, and they are filling that gap. Because every bank has its own appetite, commercials, policies around it, that how much they can take on a particular deal.
Understood. Thank you.
Thank you.
Thank you. Before we take the next question, a reminder to all, you may press star and 1 to ask a question. We have the next question from the line of Akhilesh Kumar, an individual investor. Please go ahead.
Hi, Vinay. I wanted to know, we have started factory business recently. What kind of earnings what we are generating here? Is it similar to what we are getting in supply chain finance?
So there's 2 colors to the factoring business, Abhilash. One is the trade business, another is the bilateral factoring business. Now, trades, as I'm sure you would know, it's a very competitive market, but we still able to generate yields which are at par with our channel finance business. However, in case of a bilateral factoring, it really depends. There are cases where we are doing at par with the channel financing kind of yield, but there are cases where we may be doing even higher, slightly higher. But on an average, we continue to maintain the average yield of 12.5% on our overall AUM. That was the stage in Q4 Q3, and now Q1 also. So that something has not changed. So clearly, by adding factoring, although it's a very small fraction of our overall book, we have not neither diluted nor enhanced our overall yield on the portfolio. It remains on in and around 12.5%, 10 paisa here and there.
Okay, that's great. And in GIFT City, what kind of business we have in mind, which we are targeting now?
So it's a long shot, Abhilash, because it's subject to dual regulatory approval from RBI and IFSCA boards. The idea is, okay, today we are only catering to domestic demand, but when we meet our anchors corporates, when we meet our MSME suppliers or the vendors, we see there's a lot of inbound and outbound business which is happening between India and outside. So that particular opportunity from a supply chain perspective, we plan to target and augment from a GIFT City. It gives a lot of advantages also from a tax perspective, from the flexibility perspective, and from the overall the government and RBI blessing perspective. But it's subject to a lot of approvals and business strategy to do that. But our objective is to look at international supply chains from a GIFT City.
Okay, that's great. And part of those few new areas of business what we were looking for, including that insurance broking, in this quarter, will there be any chances of getting on track on them?
No, this Q2 I don't envisage, because there are 2-3 layers to it. We have already incorporated the company. Now we are going to IDA for the application and license. Once we have that, then we'll have the team, infrastructure, process, policies around it, and then we start marketing. Because see, this is not our main business. This is a cross-sell fee-based business which we are planning to do. So we are going little cautious, little slow, but we would want to launch with steady manner. But I think I don't expect it to happen before Q4, not even Q3.
Okay. But what kind of insurance we are targeting, like say retail? Like say
No. It is existing business which we are already doing within our ecosystem. It is not going to be a full-fledged insurance broking as if any large insurance company would be doing. So there are 2-3 elements to it. Number one, can this insurance broker company help us connect with the better insurance companies to create certain products which are more in tuned and applicable for the supply chain business? Number one. Number two, from the MSME cohort and the anchor cohort perspective, can we use this insurance as a product, more of a cross-sell opportunity? So there's only 2 objectives.
Okay. Because what I was
separate.
Okay. What I was wondering is the
independent team.
Okay. Because your interface is only with the SMEs and corporates. So how and what kind of insurance is it? Okay.
So there can be keyman insurance, there can be group health insurance, there could be any trade credit insurance. There are many insurance products which are evolving in the country, and from a supply chain perspective, from the MSME perspective, in bits and pieces, there are few products are available in the market, but there are few products which need better marketing or maybe better thinking that how that can be monetized.
Okay. Thanks a lot. That clarifies. That's it from me.
Thank you. Thank you, Abhilash.
Thank you. We will take the next question from the line of Bhagavant Reddy, an individual investor. Please go ahead.
Yeah, hi sir. So currently we are able to grow at 80% year-on-year, double-digit growth quarter-on-quarter. But just wanted to understand, why is our guidance to grow at 25 to 30%? Is it just risk management, or it is the base effect, or the opportunity size, or we are just being conservative? Wanted to understand regarding that.
So we are a very conservative lender. That conservatism is reflecting on our NPAs and credit cost. That is also reflecting on our OPEX cost. Because we are a cost-focused NBFC, we want to go low and maintain low cost of borrowing, low cost of acquisition, low operating cost, nil credit cost. That is the objective with which the entire team is aligned and we are working with. So 25 to 30% CAGR over a period of 3 to 4 years, I think it's still a very healthy growth. And beyond this, we'll grow very, very steady manner, but we don't want to grow just for the sake of growing. We will want to grow profitable, we want to grow sustainable and stable growth. That is what the growth objective is.
Understood. Thank you.
Thank you.
Thank you. We will take the next question from the line of Akash Srivastava, an individual investor. Please go ahead.
Thank you for the opportunity again. Sir, on the 28th June, we have a notification regarding wholly owned subsidiary formation doing a business as the insurance broker business. So just want to understand what type of business it is. And second, on our Q3 FY26 investor presentation, we have guided for FY30 AUM of 7,500 crore, and currently in latest call you are guiding for 10,000 crore of AUM. So whether we are increasing our guidance, and similarly for the PAT, we have guided for 375 crore PAT for FY30, and I think in FY27 alone we will be able to do 225 crore. So are we increasing our guidance in terms of PAT and AUM?
Akash, thank you so much for coming. On insurance broking, as the insurance brokers, we have set up a wholly owned subsidiary. Now we are taking an IRDA license. The idea is to have insurance broking. That insurance broking is a fee-generating revenue from SG Finserve perspective. The fee-generating revenue by looking at the policies requirement, insurance requirement of our ecosystem. So our objective is to do cross-sell in form of insurance to our existing ecosystem borrowers or the anchors and the corporates we are dealing with. So that's the objective with which this company is set up, but this is subject to IRDA approval. We will be going to IRDA and take approval. So it's subject to regulatory aspects before we commercialize this business. It is still at least 2-3 quarters away from here. Okay. Now on the guidance, we have been maintaining our guidance of 25 to 30% CAGR growth on AUM and 30 to 35% CAGR on the profitability. However, the Q1 has been a stellar performance. So as the base increases, our growth aspiration does not die. We've grown from a book from a 4,000 crore approximately on a March end to around 4,500 crore now. So the 500 crore kind of an incremental AUM which we have built during Q1, that's something which will stay with us. As the base is increasing, probably we may end up achieving our stated objective of FY30 now in FY29 because the speed and the velocity of the business which we are doing is faster than anticipated. But 10,000 crore with the current run rate which we are looking at, 10,000 crore AUM by March 30 is definitely achievable. But the visibility perspective, I only have visibility of FY27, which I said 300 crore kind of PBT, maybe 225 crore kind of a PAT. With around 1,700 crore kind of equity and around 5,500 crore kind of AUM. That is something which is visible today. Unless few things drastically change because of geopolitical and the business perspective, this is something which I have a clear sight and visibility as per the current run rate.
Okay, and sir, for the insurance broking business, we will be work like a direct selling agent, means just generating fee only, not we are setting up our own insurance entity.
No. We are not going to underwrite. It is only a broker, only fee-based business. It is not a insurance underwriting business.
So, sir, what time we can expect in this business? Are we going to do similar kind of business like PV, Centec or Policybazaar, or it is something type of business between B2B business type of insurance?
It will be B2B because we as a NBFC we are doing B2B business. So naturally, as a cross-sell strategy within our ecosystem, if the borrower we are dealing with, if there is a particular loan we have given to a borrower, and if we want to insure that particular borrower or our loan, then it's naturally for us to expand ourselves into the broking business also, which is something which we are not trying to do first time. There are benchmarks of a large NBFCs and banks who have done it, and we are trying to follow the same suit. And it's a well-tested business philosophy which we are trying to just follow.
Okay, thank you very much, sir.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. We have the next question from the line of Vipul Lamba from EVK. Please go ahead.
Hi Vinay. First of all, congrats on a significantly higher growth on year as well as quarter-on-quarter basis. So Vinay, typically in past the second half of the year is much better than the first half, and when we were showing this kind of growth in the first half itself, do you expect the subsequent quarter, because the visibility which you just shared looks to be that we will remain to the similar numbers for next coming quarters, that we will, without any quarter-on-quarter growth. So do you think that maybe we have done pretty good in this quarter and subsequently maybe for this year at least, the numbers may not go with the same pace the way we have done in the Q1?
It's a very good question, Vipul. So that's something, when we ended our March, when we exited the year in the first week of April, we front-loaded all our efforts to Q1 because we believe, if we build a book and front-load it will help us throughout the year. That is the kind of strategy, we work with. So now when we're sitting with around, 4,000 crore kind of average book, so that 4,000 crore average book is going to sustain for throughout the year for us. But whatever incremental business we do, it will be add-on. So 71 crore annualized basis, you're right, 280 crore is a no-brainer, without any growth. So incrementally, are we going to only look at 20-30 crore kind of a profitability from a PBT perspective? So that is something I may be under-committing, plan to over-deliver, but there may be, I'm keeping maybe some cushion as a conservative cushion that I may not need to grow and maintain it, sustain it, and then probably look at, the growth avenues.
Okay, so what you're saying is that maybe now subsequent quarters we may remain at the similar run rate which is going on, right?
Run rate, like 27% growth quarter on quarter, definitely I'm not going to maintain because there's an element of 337 crore equity which we have infused towards the fag end of March and the beginning of April. If I have to normalize that impact in the month of Q4 because I didn't have that money in Q4, so we also need to keep that in mind. So a growth 27% quarter on quarter may not be the right number to look at the growth. If I were to normalize that equity in Q4, then the growth may be only 14-15%. So quarter on quarter, maybe 8 to 10% growth is something which we are targeting because that will be more sustainable and it will only help us to maintain credit cost in check.
Okay, so you're saying 8 to 10 quarter on quarter from a PAT perspective. From a AUM perspective, we may remain 15-16% Q on Q, right?
Yes, you may be right.
Got it. And just considering that our AUM is also not very large, and we are sorry, I may be repeating the same question a lot of people was trying to ask you, considering that we are not that bigger base, and we are saying that 25 or 30%, and maybe 10,000 crores in another 3 years we're talking about. Isn't it very, very conservative? Because if you see, we are already at 4,500 and doubling it in 2 years, if we even go by 15-16% quarter or even 10% on quarter-on-quarter basis, it will easily happen. 2.5 year max.
Yes, Vipul, so that's the way, because it's an evolving dynamic business, but we also need to look at, what kind of a shock a balance sheet can sustain. 54 crore quarterly PAT, I would not like to venture and be very aggressive. We would rather be conservative, sustain and build the network to a level that, okay, if there's any sudden shocks which happen in the business, we can absorb that. So 25 to 30% growth on the AUM is also, well, to me, to my mind, although the base is small, but it's still a very healthy growth.
Vipul, hi. Vipul, Anubhav here. See, we can always go for 30, 40, 50% growth. Why not? Provided there is no NPA. Okay, so our mission number one is not growth, but to ensure that there is no NPA. Right, in the system, if there are bad accounts, right, and we keep on lending to those accounts, right, we can always show aggressive growth. But that is not our mission number one. Our mission number one is that we ensure zero NPAs. Right, we started this company in October 2022. Now is the 4 years we shall complete in next 1.5 quarters. The most wonderful thing which we have been able to prove is that there is no NPA. Correct. From zero loan book today we are at 4,500 crore loan book, zero NPA. Right. Then this can be 10,000 crore number also, provided there is zero NPA. Or it can be 25% CAGR, provided there is zero NPA.
No, of course. No, I completely understand what you're saying, and I agree with you that the NPA has to be on the right. Understood that. And how do you see the factoring business growing? Because as of now, the factoring business in India is not that explored if you see developed world. I mean, most of the businesses, I do some business for US in logistics. All business, the whole logistic businesses run on factoring. I mean, there are large factoring companies there. How do you see that? Because right now we are very, very small in factoring. And how do you see that that pie growing in part of our overall AUM?
So with the blessing of Government of India, the focus of on the MSMEs, helping the MSMEs to contribute significantly to the GDP. When the success of trades, the success of Factoring Act in place, there are growth happening in corners. But as I said, there are only 1% banks and NBFC put together, maybe even less than 1% banks and NBFCs in the country who are doing factoring business. So there is a lot of opportunity for many banks and NBFC to join this business and expand the market, because the market will expand when everybody more players come to the play. But yes, the factoring still is happening in a very decent stage. We cannot compare ourselves to maybe the US, which is a more mature market. Factoring, personally I believe, the factoring is going to grow at a very, very massive pace, and success of trades should help the banks and NBFC to gain the confidence and do bilateral factoring also besides the trades.
So when you say bilateral factoring, that is different than a normal factoring, which is done where you get a bill and you kind of finance that?
No, but when I say bilateral, it means the arrangement between the buyer, seller and the financer. When I said trade, so it become a four-party, right? It's a platform exchange also comes.
Got it. And do we have a separate team primarily focusing on factoring, growing the AUM in parallel to our supply chain AUM? Because I'm sure in the factoring, it's not only the supply, it is the sectors maybe will remain same, or it will expand to many more new sectors also, which we're doing other than the supply chain sector like auto and others which we're doing in supply chain.
No, the factoring has completely different sectors. The factoring generally in auto and steel, the factoring is less because channel finance has matured. Generally, factoring is happening on those industries where the channel finance is very nascent stage or not applicable, because there are many businesses who are doing B2B business where the channel finance is not applicable, or there are many businesses who are too small or they're too new as an industry, they are not very well versed and comfortable doing channel financing, so they're doing that factoring. But from a team perspective, we have a very, very dedicated team. We have hired senior level people based out of Mumbai and Delhi and Calcutta. So we have people at a senior level who understand this product, who have done factoring in the past in their previous organization. For example, Lalit, who are CBO, who has done factoring in his life through Axis and otherwise. I have done factoring in my earlier organization. So there are people who understand this product and who are committed. That's why the reason when the new management took over and the new people joined us, we went to RBI and took this license.
Got it. And what was the factoring AUM for the current quarter, and how much was the growth in Q2 basis?
I think 25 crore was the factoring outstanding on June. We had 175 crore outstanding in the month of March. So on a comparable basis, we've grown by 50 crore on this.
Got it. And one long term, very, very long term question, when if you see when Bajaj Finance started, it was also had an advantage of a parent group, and they started with normal vehicle financing and it entered into many more and unique. They came with a consumer finance as a unique product, which you kind of is entering into supply chain and the factoring business, which is again a very wide space. So within the financing horizon, do you see you also entering into many more new products and maybe expanding the way replicating the Bajaj Finance model, considering you the rate, especially as you have the backing of a large corporate and a good credit rating since the starting?
So definitely we're very proud of our parent. The entire genesis of this having NBFC started with 100% dependency on the ecosystem of APL Apollo. That's how we found our feet on the ground. But as we are growing and maturing ourselves, we would like to expand ourselves. As I said, 52 anchor corporate we are already banking with. In their ecosystem we are already present. And our dependency on APL Apollo ecosystem, if I were to use that dependency word, has come down to 1/3 today. But as we would definitely continue to grow within our ecosystem of our parent, but we will grow outside the ecosystem parent also. Maybe the growth of our SG Finserve will outpace the growth within the ecosystem. So naturally, the dependency on the parent or our group would reduce going forward.
Good. One last, any vision for say 5 years, 7 years, anything which you as a corporate you have thought of from a vision perspective, 5 years, 10 years down the line, any vision you would want to share with us?
So 5 to 10 years, we would like to be seen as a comprehensive financial solution provider, not only the NBFC. We have approval from the shareholder to look at AIF as a business, ARC as a business. We got an approval to set up ourselves into GIFT City also. We have already incorporated an entity on the insurance broker. So there are multiple businesses which are natural expansion, natural phenomena to align ourselves into that adjacent services. So 5 to 10 years, we would like to see ourselves as a very strong financial service provider, covering the entire spectrum of supply chain, lending, equity, broking. That is the mandate which we are currently operating at.
Got it. AIF you went with from a wealth management perspective, right?
That's right.
Got it. Thank you. Thanks. And again, many congrats for such great numbers.
Thank you so much, Yusuf.
Thank you. We will take the next question from the line of Prince Chaudhary from PNC Wealth. Please go ahead.
Yeah. Hi, sir. So I want to understand more on the competitive things. Like even at the niche business, we are growing at 25% of AUM. Why don't we see more?
Sorry to interrupt in between, Prince. Your voice is breaking.
Yeah. Hello.
Could you please use your handset mode and speak?
So I was asking more from competitive landscape part. Like if we are really 20-25% of AUM.
Sorry to interrupt in between again. Prince, your voice is breaking.
Now?
Yes, you may.
Hello.
Proceed. Thank you.
Yeah. So I want to understand more from the competitive landscape perspective. Like even in the niche business, if we are able to grow at 20-25% of AUM, why don't we see NBFCs or other large banks to enter into this space?
So the supply chain market, Prince, if you were to look at, you may be looking at the banks and NBFC overall balance sheet and maybe looking at their NPAs, which is comparable to their overall AUM. But if you were to dissect that AUM with supply chain and non-supply chain finance, you will see the reality. The supply chain finance, by nature, inherent nature, it's a long gestation because it does not grow overnight because it's a very high churning business. For example, we did disbursement of maybe more than 7,000 crores to build a AUM of 4,500 crores. It needs a high level of velocity in terms of business, number one. Number two, but the credit quality of a supply chain business across all banks and NBFC, exception will be there, but across all NBFCs and banks, you will see the credit quality is top notch. But you would have not got those numbers dissected in the balance sheet, divided between a supply chain and non-supply chain.
Okay. In previous some of your answers, you have also mentioned some sectors get matured, then you don't need the factoring part. Could you explain that part of?
For example, automotive. So the entire auto sales are happening through a dealer distribution model today. So, and dealer distribution and automotive sector, we know it has been here in the country for now almost 45 years, right? Now this 45 years of history of an anchor OEM selling the vehicle to the dealer, and then dealer is attracting the consumers like you and I, and then we're buying the vehicle. So the entire cycles have seen now maybe we have seen more than 500 cycles so far, right? Now the cycles have matured. Now the anchor, the dealer, the financier, and the consumer, everybody's aligned. The consumer know if they were to buy a vehicle, they will be ready financiers to give them auto loan. Dealer also knows if I were to open a new showroom and have a lot of inventory for a particular OEM, there will be financiers to provide them inventory financing or a supply chain financing. Anchor also knows if they were to build an inventory and they go to the financier, there will be financiers available to finance that inventory or their sales to the dealer. So that was the maturity I was talking to. That maturity beyond auto, definitely we have witnessed now in steel, electronics, electricals, white goods, IT peripherals. So these are the industries which goes through the cycles. From purely channel finance perspective, the industries are maturing.
Okay, sir.
The steel,
Thank you.
10 years back, the steel was not even participating on the channel financing. But in last 10 years, we see steel has grown very big.
Right. Thank you, sir. Understood.
Thank you.
Thank you very much. Ladies and gentlemen, we will take that as a last question. I now hand the conference back to the management for the closing comments.
Thank you so much, Equirus team, for hosting us today. Really happy to answer all the questions, and thank you all the stakeholders for joining on this investor call. For the sake of repetition, as a management, we remain committed to maintaining a strong and sustainable growth and creating value for all our stakeholders, ranging from employees to the customers to the investors, and so the families. We believe this is the families we are touching on every day basis. On the overall trajectory, AUM perspective, 25 to 30% CAGR growth over a period of the last 3 to 4 years is something which we are targeting. However, we continue to remain operating on a lean structure, which will help us grow this profitability at a 30 to 35% CAGR. But if I were to dissect that PBT and PAT from FY27 and beyond, then FY27 we look and to achieve PBT of 300 crore, so that it creates a strong equity base for us by the time we exit the financial year. We are on track to maintain our return on assets ranging from 4.5 to 5. As in Q1, you have seen that we already achieved 5.1. We are on track to grow our return on equity. We have already expanded from 12 to 14%. Our aspiration is to grow from 14 to 16 now as we move forward. Cost to income and our borrowing cost and the delinquencies, we believe and our aspiration is to maintain top notch from the credit quality and cost perspective. So that's it from the management. On behalf of entire SG Finserve, we thank all the stakeholders for joining us today. Look forward to meeting you all again in the next quarter earnings call. Thank you. Jai Hind.
Thank you, members of the management. On behalf of Equirus Securities, we conclude this conference. Thank you everyone for joining with us today, and we may now disconnect your lines. Thank you.
Thank you.